Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today I want to answer a really important question that you guys asked on public, and I've gotten a few times before. I don't think I did a video on it, so I want to go ahead and answer that question, and I think this answer can help you become a much better and more informed investor. So the question is, what is due diligence? How do you conduct due diligence, also known as research? Because anyone will tell you, hey, I like this, and this about this company. I like this about this ETF. You should go do your own research. But they don't really tell you what to research or how to do that. So today I'm going to give you probably a 3 or 4 step research process that you can use, as most of the information on this channel and that I give is for beginners. So this is a surface level. You probably need to know these basics first, and then you can conduct deeper research if you want to, or you can make a decision from there. But doing your due diligence, doing your research is one of the most important things you need to do as an investor. And the reason why is because you don't want to be caught off guard. And what I don't want you to have to do either is to invest in something and then not know what to do once you have it, and not know when to get in or when to get out because you didn't know what to research. So I'll give you my 3 or 4 things that I look to and what I think most investors should know. Okay, so I'll start with, I guess, the easiest thing and then kind of go to the hardest thing, and these are all really easy. But I'll start here. So the first thing that I like to do when I'm looking at an investment is check the chart. Now, I'm not talking about the complicated charts of what price to get in and when to get out and all the fancy lines and all that. I'm talking about 2 charts specifically, a 5-year chart and a 1-year chart. So you can do this on public, you can do this on any investing app, you can do this on Yahoo Finance. Yahoo Finance is free. Type in the stock you're looking at, hit the 5Y button. That's 5 years. It will quickly tell you, is this line green, meaning it's going up, or is it red, meaning it's going down? Now, the reason why I want to look at 5 years is because if I've given you 5 years to figure it out and you haven't figured it out and you've been losing money for 5 years consistently, that's a problem. And that's usually an automatic no for me. Now, everybody can make a case about everything, right? And you can say, well, because this and this happened, and this is why the company is down. Now, that's why I urge you to look at the 1-year chart. And there are 2 reasons why you want to look at the 1-year chart. The reason is, number one, it gives you a more recent picture. This is what's happening with the company right now. We have research from UCLA's Anderson School of Business that suggests that 1-year chart, if a company has done, let's say, 20% and was one of the best companies in the past year, it is more likely than not that there will be among the best companies the next year. So it's called momentum. So you have momentum within that 1 year. It doesn't work for 5 years. It doesn't work, based on their research, it doesn't work for 2 years. It doesn't work for 3 months. But it does work for 1 year. So that does tell me over the past year you did pretty good. Chances are, not a guarantee, but chances are the company will do well the very next year over that time span. So for example, I'll look at one here. You guys won't see it on the screen, but I just want to give you an example of when it works, or how I kind of judge this. And also, if I had to make a determination, let's say the 5-year chart wasn't great, but the 1-year chart was, how do you weigh those decisions? That's where steps 2 and 3 may come into play. But for example, I'm bringing up Ford for a specific reason. I'm on public, I'm looking at Ford, I'm going to hit the 5Y button, and I hit some other button. Hit 5 years. Ford is up 26.5% in the last 5 years. I didn't actually know that. I really expected it to be down, but it wasn't. Great for me. All right, so 26.5% in the past 5 years as of today of this recording. And if I go to 1 year, it is up 100%. There we go. Pretty nice. That does not mean it's going to be up 100% for the next year, but it suggests that it would be pretty high. So I would love to get another 100% return, but we'll see what happens there. So that's the very first thing, because I'm not going to invest in a company that is down significantly. I ain't doing it. That's just not. If you haven't figured it out for 5 years, it's just not something that's going to work for me. So I'm going to do another one real quick, and you can do this along with me to get practice. So I'm doing this on public. You can do it on Yahoo Finance, public, wherever you want to do it at. So AMC, doing this for a specific reason, as you can tell. So everybody wants to know my opinions on that. I don't know why. So if I hit the 5-year chart, very, very strange. It's up 72%, but if you look at it, it's nothing, and then just really shoots straight up and then kind of falls back down. We go to 1 year, up 904%. Now, this is one of those cases where you definitely don't want to make this your one and done. You don't want to just say, oh, the chart's up, I'm just going to go for it, because there are more things that you want to know, which we're going to get into. So number one, check the chart. It's a really quick, easy indicator if you want to continue doing your research or if you do not. You also want to note, what are the differences between those two, between, 900% in 1 year, but only 72 in 5, or, up 26% in 5 years, but up 100% in 1. That difference is vast, right? So something important or something significant must have happened within that 1 year. You must investigate further. So that's number one, we're checking the chart. Now, number two is just check the recent news. Figure out what is going on with the company that you should just be aware of. The easiest way to do this, again, the same public app that you're on, the same Yahoo Finance app that you're on, the same, if you have an iPhone that has a stock app, the same stock app. You can do this literally anywhere for free. Okay, so what I like to do is I will click on the company, I'll scroll down. You can also go to Google News, type in the stock symbol, hit the news tab, and I'll pull up some stuff. I like to read, I would probably say 5, just to get a good sense of what's going on. And this stuff is going to help you to understand what's going on with the company and whether or not you want to invest or not. So for example, I'm going back to Ford because Ford had earnings today, which means there's a lot of news out about Ford. So I'm just going to read you some quick headlines. This is going to help me to familiarize myself with the company, and especially because it's earnings, I can figure out like really what are they expecting and what's going on. All right, so I have not read these before. I'm reading them as I'm reading to you right now. I'm just going over the headlines. I will be reading these later because one, I want to do a video on it. 2, I have Ford, so I want to know what's going on. All right, so Ford cruises by chip shortage boosts outlook. Interesting. We talked about the chip shortage. Somehow Ford has gotten around that. Interesting. Let's see. Ford expects semiconductor rebound. Okay, that's good because again, yesterday we had talked about the chip shortage and how it was hurting some companies. Okay, Ford F-150 Lightning Electric pickup reservations. It doesn't finish the sentence there, so there's something going on there. Scrolling. F-150 stuff. Raises outlook for 2021 after surprise second quarter. These are good things for me. Okay, so I can hit view all, but again, if you're looking at Google, if you're looking at Yahoo Finance, you're going to get all similar stories. So this is just quick and easy thing for me to just to see. Again, you want to read the articles, not just the headlines, to see what is going on, learn more about the company. This helps me to not go into this investment blind. The good thing is, now that I know, based on these articles, that the semiconductor shortage is, they've either A, gotten around it, or they're seeing a rebound, that helps me across the board. That helps me with my AMD stock. It helps me with my NVIDIA stock. It helps me with perhaps my Tesla stock, right? It also helps me to gauge my expectations for the rest of the year. If they're raising their expectations, if they're going to be more conductor chips, they're going to produce more cars, I might want to stay invested in this, right? This is information I didn't have 5 minutes ago before I started to look at those stories. These things can help you. So I'm gonna flip back over to AMC. This is not a Ford versus AMC video, but I know people invest in AMC. So we'll go back to AMC and just see the exact same process, and you make your determination about whether you want to invest in it or not. All right, so why could it be do or die time for AMC? Bears. Okay, bears mean they don't like AMC. They think the stock is going to fall. Is it time to sell AMC stock and buy IMAX? Interesting. Why is BlackBerry soaring while AMC and GameStop fall? AMC Entertainment is falling today. Okay, maybe that's the case. 7 meme stocks that you shouldn't touch with a 10-foot pole. Okay. So anyway, these are really interesting headlines. But again, I really want to read this 10-foot pole one. I'm gonna pull it up real quick because it's actually quite funny. So headlines will grab you, right? They definitely got my click. I'll be reading this later. Maybe we'll make a video on it. But again, step 2, read the articles. Maybe an article a day if you really want to do that. But again, if you're sitting down and doing this in one day, which your research process did not have to be one day. But if you want to do that, go and read 3 to 5. I think that's a good place to form your own opinion and to form your own views about what you think. So number 1, check chart. Number 2, read 3 to 5 articles about the company. The more the better, but you don't want to sit down and read 1,000 articles. All right, so number 3, 3 to 5 articles. But number 3 is check the company's actual website. This is going to give you the deepest information and is quote unquote the hardest. I say that because it's 50, 60, 70 page documents. Go to the investor relations. What I like to do is just go to the company website in the search bar, or just hit Control Find. That's how I do it on my computer. I have a Surface Pro, and hit investor relations. And you'll scroll down, or it'll take you directly to the page, and it'll give you their annual report and usually their quarterly report. This is going to give you all the deep insights about what they actually think about their company, including all the financials, and it gives you some expectations as to what they are thinking about, and it kind of gives you all the stuff in which people use that to write the article. The reason why it's number 3 and not number 1 is because, again, it's a lot more work. You might not have time to go through and sit and read through all of that stuff. However, it is important if you are new. It is important if you want to be more informed about the company. So I think I'm going to stop there to give you those 3 things to do your due diligence. Because again, you do not have to be an absolute expert in these companies. I don't think that actually helps you. I think there's a point, I forget the name of the term, where you know so much that you feel like you know so little. And there's like a knowledge curve. But really the reason is, the further you go, let's say you get, I don't know, a PhD in stock research, or even if you are a super expert in one specific field, I actually think that hurts you just a little bit, because when you're so knowledgeable about a company or about an industry, right, you tend to be overconfident, and you start to kind of over-explain why you think something is happening one way or another, and that can actually hurt you as an investor. So for example, if I worked in banking, right, I could say, well, Wells Fargo is doing this, this, and this, therefore I'm just going to keep investing in it even though it might not be a great company, right? So you don't have to be an expert. Don't feel like you have to know the ins and outs of every single company down to a T. You do need to know the basics. You do need to know what they are doing, what is going on with the company, and what do we expect. So those are things you do want to know. You don't want to get into something blind and not know what they do, or not know what is expected of them. Doing that article search can be really helpful as well, because you're going to get somewhat of a consensus or a general understanding about what is expected. So going back to AMC and going to Ford, I'm a big person when it comes to understanding why a stock is moving. And I want to invest in things, I think most people should. You'll want to invest in things that have a legitimate reason to go up, but you want it to go up for business reasons. Okay, I want a company to rise and sometimes even fall for business reasons. I don't want it to fall based on people's behavior. I can't predict behavior. I can't bank on behavior. I can bank on the business itself. So if you tell me, and we know based on that article, right, we didn't read it yet, but if we know that semiconductors, there are going to be more of those, that means that Ford is going to be able to produce more trucks. You produce more trucks, you make more money. You make more money, the stock goes up. Okay, makes sense. But if I'm looking at an AMC and someone says, well, I have to wait until a short squeeze. We did videos on those. Go check those out if you don't know what a short squeeze is. But if I have to wait for the apes to buy in, or I have to wait until it's the next meme stock, I have to wait until enough people tweet about it, I have to wait until Elon Musk tweets about it, that's behavior that I cannot predict or control. I have no idea what's going to happen there. I don't want my money to be based on behavior. I want it to be based on the business. And the way for you to understand more about the business, check the chart, read the articles, check out the company's website. Those are the 3 things I think you need to focus on when it comes to due diligence and understanding and doing your own research. All right, that's it for me. Thank you guys for coming out to the video. I guess you're coming out to the video. You get what I'm saying. Hit the like button, hit the subscribe button, and tell your friends about the channel. We are almost to 1,000 subscribers, which is really cool, because we didn't really get serious till like, I don't know, a month ago maybe. We'll see. But thank y'all for coming out. Also, last thing before I actually go, I'll put my link in the bio for my book, From Burning to Blueprint: How to Rebuild Black Wall Street After a Century of Silence. There's some really good financial knowledge and historical knowledge that I think you should know, especially on the investing side. So make sure that link is below. Also, it's one of the last few days for the public bonus. So if you have not joined public, you definitely want to do it. You can get up to $1,000 in stocks like Google, Apple, Amazon, and Tesla if you're new to the app. If you're already on the app, invite your friends too, and y'all can both get paid. We can all get paid here. And y'all know that Google is one of my favorite stocks, because I called that thing last year, and I'm already up. I think it was up 81% from as of yesterday for the past year. There you go. Things you want to know. All right, that's it for me. Talk to you guys later. Bye.